Okay, the YouTube feed. Thank you so much for that. Oh my gosh, all these people sitting on YouTube waiting. When's it going to start? Like it's 8:05 or something. You better be starting soon. I'm assuming it's going in on the YouTube feed now. It's actually okay, there it is. It's just loading up. Okay, the YouTube feed. Thank you so much for that. Oh my gosh, all these people sitting on YouTube waiting. When's it going to start? Like it's 8:05 or something. You better be starting soon.
You have the echo though, so you're gonna have
I'm
to.
assuming it's going in on the YouTube feed now. It's actually there it is. If I just stop that URL, it should work. So still going out of the feed. I'm just not receiving it. That's okay. All right, that's cool. That should work. Thank you for that, Aaron. What was the other thing you said was there's something else you said about
The recording. Start the recording.
The recording. My gosh, you are on the ball. Recording on this computer. All right. Good evening, ladies and gentlemen. Welcome to DayTradeSPY.com's Week-In Review. My name is Hugh, Humble Hugh, they call me. Well, nobody really calls me that. I call myself that. And Aaron, my good buddy Aaron, he's the infamous Aaron Stevens, the incredible Aaron Stevens. Okay. Amazing Aaron Stevens. I'm going to tell you something like that. Between him and me, so you see me on the cameras because I'm the good-looking one, ladies. All right, just to be clear. But he's the smart one. So never underestimate the intelligence. Okay.
Have to stay behind the veil here.
And today is October the 1st, 2023. I'm all excited today because I'm going to be honest with you here. Special day for me. My wife and I are celebrating our anniversary today. It is today. And our wedding anniversary. So I remembered. This is the one.
Congratulations.
Thanks. 2 days, Aaron. You should always remember your anniversary and your wife's birthday. All right. If you forget any of those, you're toast. You're just so toast. You will be for the rest of your life. Because if your wife is anything like mine, she's got this amazing random access memory. And 20, 30, 50 years down the road, they'll remember that tape. You know, back in 2003 or 2023 or whatever it was, you forgot our anniversary. Never forget that. All right, let's get moving. I'm killing a little time because I see a lot of people still joining us. That's what I'm doing. I'm killing a little time. So anyway, I want to say, if you find me going too fast, just tell me to slow down. The other thing is, this is an interactive session. You'll find the questions box on your Zoom dashboard. Please respond. Let's get interactivity going here. And any questions or comments you might have, put them up there. Love to address them. Okay. All right. Thanks for that, Kumar. You both rock. How many years? I like to say 24, but it's really 12. But if you take my 12 and her 12, you get 24. Feels like 48. Or it might feel like 6. I don't know. We're still in love. We still talk to each other. I think that's a pretty good thing. Thank you for that, Kumar. Congrats to you and your wife, 2 lucky people. I like to think so. Thanks for that, Paling. Thank you, everybody. Thank you all that. Okay, cool. All right, let's move on. Week-In Review. All right, I'm going to ask you some questions here, but first, here's the disclaimer. I'm not going to read it to you. Just take about 5 seconds to read this. Basically, the long and short of it is you are responsible for everything you do. We are responsible for nothing. That's a pretty cool way of doing things, isn't it, Aaron? I mean, how can you do that? It's written by your lawyers.
Leave the trigger in the client's finger. That's what I say.
You know, I think we should develop this thing. We're going to plug it into a USB port, and they're going to wrap it around their wrist. Maybe there's something out there, and I know we got to find this where we actually hit a button, and it sends an electric shock through. So that if they're ready to hit a sell order or something, or a buy order, say not yet, hold on, and we send the shock through and says, get your hand off the keyboard. Yeah. Right? Get your hand off the keyboard. I think that'll be a really cool innovation there. Anyway. All right. So past performance does not guarantee future results. You alone are responsible for all your own trading. Charts are courtesy of TD Ameritrade, Thinkorswim, and or Tasty Trade, whichever, if we happen to show something. These are the 2 platforms that we use. All right. And no, it actually has been, by the way, it has been 12 years that we've married. So, all right, everybody's saying congrats. Hi, Mr. James C. What is the most loss you take on a losing trade? We'll get into some questions later, okay? We're getting all those questions later. Here's what we're going to do. Week-In Review. All right, so questions box, I just mentioned that. All right, a little bit of a background. I used to work for corporate America, handed off a lot of my money to my financial advisor. You do not need a financial advisor anymore, ladies and gentlemen. Now, that said, I think if you're like 20 or 30 years old, you might want to talk to one just to see about long-term, but just bear in mind, Nobody knows any more than anybody else in this world, unless you are somebody like Fed Chair Powell, who moves the markets, or if you are a CEO of a company who is going to move the markets on your conference calls, that sort of thing. No financial advisor, I believe, all right, has any more insight than Aaron and or myself, because the markets are fluid, they're dynamic, they're always changing, they're always moving. I don't know about you, but I am not that smart to know where the markets are going to be a year from now, or 6 months from now, or a month from now, or even a week from now. But we've got a pretty good handle on where the markets are going to be today and maybe tomorrow. And Aaron has excellent insights as to where the market is going to go in the next 2, 3, 4, 5 days, whatever. Okay. From his background, he'll tell you about that. Anyway, as it turned out, my financial advisor blew out about half my account before I realized. That's when I seized control, took it over, and accepted the fact at that point, after many years of doing this and working for corporate America, I thought, oh boy, this is not going very well at all. But it looks like I'll probably be pouring coffee at my local coffee shop when I'm 80, 90 years old, if they'll have me. But I vowed at that point that my kids are not going to suffer, all right, with their education. I am going to do whatever and everything and anything it takes to make sure they get a good education. All right, it would be a crime, it would be a sin if we drag our kids through our own, failures that way. So they were going to get an education. So I set out to learn everything I possibly could about this thing called the stock market. I always knew there was money in this business. I mean, I knew that. It's gut feeling. I knew it. I just had to somehow lasso some of this money and parlay it into my own, gains and stuff. And eventually, so I took all these courses all over the place. You name it, I probably took it. And I bought a lot of those courses I bought, right? I got lured into buying these courses, and many of them were probably okay, but a lot of these things I would take home, and you put the DVD in or the CD or something. You say, geez, this isn't the way the guy showed it earlier the other day. I'm not sure. And call tech support, and I'm getting somebody somewhere else. They don't speak English. I can't seem to get from A to B in this thing here. What's going on? And eventually, I would stop using them. And some of these courses were unbelievable. I mean, there's this one, I can't remember which one it was. Even if I did, I wouldn't tell you because I don't want any lawsuits or anything, but it would ding my computer every few seconds, ding, 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 and all these different noises. It would completely overtake my computer for buy and sell orders and stuff. So what's going on here? Little, red lights, green lights, blue lights, you name it. It was terrible. I looked at Forex. I looked at futures. I looked at, everything. I started with equities, and I looked at options, and I really kind of got attracted to options. I just felt very comfortable with these things. I thought, this is interesting. It's actually very interesting. And I started trading them. And anyway, long story short, I discovered a pretty cool little system that worked for me. It worked well for me. And I started making some pretty serious money on the market. I eventually I would have lots of losses. Believe me, don't get yourself. I was not one for. I'll tell you, success on the market is not a straight line up. It goes like this, up and down, up and down, up and down, up and down. Sometimes really far down. Sometimes you blow out your account. I blew up my account a number of times before I got good at this. But every time I had a loss, I would stop and I would take a look and see what caused the loss. What is it that I did wrong? Did I do something wrong? Did the market just change? Is this a crapshoot? Is there something I could do to minimize my risks, maximize my gains? What can I do? How could this trade be so good yesterday, yet today did I do the same thing and it's such a bad trade? What went so wrong? And now, of course, I would ask people and things, and I would say to people, and they say, oh, do you look at the Greeks? I said, no, it's all Greek to me. I don't look at that. Oh, well, you should. Yeah. And I started learning a little bit about the Greeks. And anyway, long story short, I started making some money. And then I started bringing home the toys. Lots of, new vacations, new cars, new house, new airplane, different things. So people would say, okay, Hugh, what lottery did you win? Can I give you my numbers? You must have the golden touch, all this stuff. No, I'm just trading SPY options. Oh, SPY options. Yeah. In and out the same day. Cool. And then what would happen is people want to know, what are you doing? And they would coerce me into putting it up on a website and showing them, and hence DayTradeSPY started. That was in 2010. 14 years later, we're still running the trading room. We're still running the inner circle. We're still running training. We're doing all this wonderful stuff. And just the other day, we broke new records with having a lot of people in the trading room. So excited, very excited. A lot of people in the trading room now, more than ever. And I want to tell you that if you're going to think about coming online, you probably should, because we have to limit it to 1,000 people on our Zoom. So make sure you come online. Anyway, that's my background. I learned from the trenches. All right. I don't want to kid you. Most of what I learned came from the trenches trading, deep mired in the mud. And I would get up, brush myself off, study charts even more, study and study more. The more I lost, the more I studied, because I knew there was an answer. And I discovered since back in those days that there was some really good answers in here. And then something really cool happened last year. We were bought out by Eagle Financial Publications, and they had a little coup. I guess they lured Aaron away from I guess a hedge fund or something. And just want to introduce you to this guy, Aaron. He's amazing. And so I have a set of indicators that I use. Okay, that works very, very, very well. Now, Aaron comes from, and he'll tell you about this. He has a set of indicators he uses that works very, very well too, completely separate, completely independent of each other. And when if he says the market's going to go up and I say the market's going to go up, you better be buying call options, because the market's going to go up. And I'm really excited to introduce you now to Aaron, and he'll give you his background. Totally amazing. You want to listen to this guy. Go ahead, Aaron.
Well, thank you. Yes, I appreciate that. Yeah, so I started, well, I'm 40 years old now, but I started learning about I caught the bug for the stock market back when I was in middle school. I was actually, I think I was in 7th grade, and I was in the middle school library, and I picked up this thing called the Wall Street Journal. I was like, what the heck is Wall Street? I never heard about Wall Street before. What happens on Wall Street? It must be a pretty important place. If people are talking about the street that, has the news, whatnot. So I opened it up, and I looked at the different sections, and I came across the market section, finance and whatnot. And I looked in the tickers, and I saw all these charts, and I saw these squiggles going up and down, and moving averages. And so I took out a highlighter, and I was thinking, or as well as a pen, I was thinking, man, I have this job. Maybe what would happen if I, bought so many stocks? So I highlighted all these stocks that were under $10. At the time, you might have heard of them: Netflix and Priceline and Marvel. At that time, all these stocks that went up through the roof. And so I got started in that, and I started reading different stocks, and then I opened up my first trading account when I was 17 years old. It was a joint trading account, and I traded. I took a little bit of a break after the bubble burst in 2001. And then I came back into the markets learning Forex, because I heard about this huge market that really never goes bankrupt unless a country, for some reason goes bankrupt, which really doesn't happen that often. And so I started studying that, and I got involved in that and learning different types of ways to trade as well. And I traded a couple of systems that had a lot of indicators on them. But what worked best for me was taking everything off and just looking at the patterns, looking at multiple time frames, and looking at the patterns of what and when price moves and why it moves, as well as using something called the Andrews pitchfork, which is based on the laws of physics. It was developed by a gentleman by the name of Roger Babson and Dr. Alan Andrews in the golden age of market technical analysis, as well as the Fibonacci patterns, ABCD pattern, which is very, very familiar with most people. And so I started working with that. I got my Series 3 commodity broker's license, and I worked for several firms, as well as most recently CPO, a commodity pool operator fund, similar to a hedge fund and an entity that had about $150 million under management. So I'm really happy to be here. I've worked with you now. I would say it's also a 1-year anniversary, Hugh, that I've worked with you. I think this is October 1st was 1-year anniversary I worked with you. So very happy to be here. Very happy to work with you. If you're new to our website, if you're new to us, we're glad to have you. And Hugh is just a very generous person, a very kind person, a wealth of information, and I appreciate working here and working with Eagle Financial Publications.
Okay, thanks for that, Aaron. Damn it, now I got to give him $5 for that. Oh, geez, every time he says that. Okay, I was kidding. Congratulations to Stephen H's older sister, her 35th anniversary as well. So way to go, way to go. All right, I've been throwing up a little, just a little interactivity here, questionnaire here. Why are you here? And be honest. I don't care who you are. I don't care. Being totally honest here. You're looking for the weekend review, the upcoming. We're trying to get an idea as to where we should focus our efforts in doing these Sunday night sessions, and give you more of what you really want. Here to pick up the free strategies, the tips, tricks, and traps. It's hard to say. Looking at how to find out how to become a better trader, because we got answers for that. You want to get the latest on our training offerings. We just got nothing better to do tonight. Any football games tonight? I don't know. Let us know in the questions box why you're here. Just very curious. All right. And very curious. So there's no right or wrong answer. And there is one comment I do want to say here. So, all right. So there's some new people who are here. Also, tell us if you are new to trading, new to options, because I'm making some sort of broad assumptions here that most people do know something about options. All right. And if you're brand new to options, you've never heard of these things before, I'm not really sure wherever you found this link or whatever, welcome. And what I'm going to encourage you, if you're totally new to everything, don't get turned off if we get into some technical talk that might be, that might be intimidating to you or something. That's not the objective here at all. What you might want to do if you're completely new to options, options is a derivative of an underlying stock. Okay. And I'm not gonna go over all that basics, because I don't want to bore those people who are actually very well, advanced in options trading, or somewhat advanced in options trading. I just want to tell you that, and if you want, those of you who are new, just book a free 15-20 minute session with me. Go to our website, DayTradeSPY.com, and I'm going to show you the link right there. I think this is it here. Also just go DayTradeSPY.com, and up at the top top left, schedule a meeting, go down to our calendar here, and just book a date and time. You have to, I think, check your time zone first, book your time to whatever, whatever time zone you are. Just click on this. If you're on the West Coast, do that, so that, and then we'll spend a little time together. Okay. I've got no problem with that. Okay. So anyway, that's that. The other thing I want to tell you about all of this is that Aaron and I actually have this saying, and this is unbelievable. I think Aaron came out with this. When our indicator, I mentioned earlier that we have separate indicators, and when you combine these indicators, like that market is almost a guarantee it's going to go in that direction, just with the way we sort of analyze it. So the saying is, when our indicators unite, our trades ignite. And it can't be any truer than that. It's actually really pretty cool. And so somebody else made a comment here. I'm going to kind of bounce around a little bit here. Somebody's who is new on, wants to learn, I guess from the sounds of it, a number of different. I thought the impression I got here, so many comments here already coming up here, something about learning a lot of trading techniques. We don't have a lot of trading techniques. And that's the beauty of what we do. We actually have just a couple very simple trading strategies. And by keeping it simple, and by keeping focused and a very laser beam, narrow focus on the way we trade, you become very good at it, like specialists. I like to compare it to, if there's something wrong with your foot, you end up going to a foot doctor. Podiatrist, I think is what they call them, or whatever. But you're not going to go to a doctor that does eyes, ears, and throats. They don't know anything about a foot. You're not going to go to a heart specialist. And the foot doctor, you're not going to go and ask the foot doctor, he or she, well, I got trouble with my lungs, my respiratory. They say, well, you're going to have to go see somebody else because I don't know anything about that. Right? So you go to specialists, and that's what we do. We have become specialists. And if you don't mind me saying this, I'm going to apologize in advance for the arrogance that this sounds. But I think Aaron and I, with our combined 40 plus years of market participation, I think we can probably call ourselves the experts. What do you think, Aaron? Okay.
Well, yes, but the same thing. We're always learning too. So we're always learning. We're always adjusting. when the market changes direction, we have to understand why the market doing what it's doing. When the market changes direction and there's extra volatility, we also have to adapt. That's about the survival of the fittest. And that's how you last the longest, is by changing and adapting to the market environment.
Okay. I'm getting some pretty good responses. I'm glad I brought this question up. This is actually the first time I brought this question up. And I like John Ness's comment here. Since I'm in the trading room, the weekend review doesn't have a lot of value to me, but the upcoming week is extremely valuable. Okay, that's good to know. And a lot of people are having a lot of experience with options, still unsure, entering calls and puts, usually call. We got a real good mix of responses here. And Johnny L, he's been here for years. Once in a while, he actually breaks down and buys something. Nothing better to do tonight. That's okay, Johnny. We'd love to have you here, buddy. All right, Mike B. All right, new to trading, highly recommended by Eagle Financial. Advertised government shutdown, but breaks another macro. Okay, got it. Really matter. We're kind of worried, but you make dollars up and down, right? Thanks for all you do. I'm trying to skip over these. Okay. Steve W. Been trading SPY options for about 2 years with mixed results. Found it it's definitely a mental game. Absolutely 100% mental game. I was going to say 95. I think it's more like 100. I'm trying to find a better way that takes the emotion, mental mistakes out of my trading. All right. Okay. All right, let's move on, folks. Let's move on here. So we're going to have a fireside chat a little bit later on here. And I want to talk about your challenges. What's holding you back? What are you looking to trade? What are you looking to improve in your world of trading? How can we be a benefit to you? Okay, so we're going to do that a little bit later on here. So here's the weekend review. We're going to go over this pretty quickly here, just to expand it out. So last Monday we had a low or no news day. Technical traders pulled SPY back up, bounced around a little bit here, somewhere around that 430 mark. Wrapped up the day around 432. Tuesday we had a little news come out. The Richmond Manufacturing Index, considerably higher than expected. Okay, a little bit higher than expected. And what happened was the markets found that to be somewhat inflationary. See, inflation is the enemy to the stock market. And consumer confidence was also lower. The new home sales inflation talk pushed SPY down about 5 points on Tuesday. Come Wednesday, those in the trading room will know this. Durable goods orders reported higher than expected. SPY found strong support at 423, but rallied back to almost clear off those losses before the end of the day. So what happened again, there was some threat of increased interest rates coming up. Now, in September, we did not have an interest rate increase, but the Feds did warn us to just sit tight, brace yourself. If we don't get this inflation down to about 2%, there's going to be at least one more rate hike at the end of, before the end of this year. I think November the 1st is the next scheduled Fed announcement, and then sometime in December. All right, so that's kind of what happened on Wednesday. On Thursday, we had a gross domestic product, GDP, unemployment claims, pending home sales. All this came in lower than expected, which was actually good news, and also set the chair for Fed Chair Powell's comments after market hours. So when there was bad news on the economy, when I say it was lower than expected, that's bad news for the economy and good news for the stock market. So when a little bit of stability comes in on the economic side of things, stability, maybe a pulling back in labor and production, that's anti-inflationary, good news for the market. Markets tend to go up. And then with the pending Fed Chair Powell's comments at 4:00 on Thursday, markets pulled back a little bit on little concerns, sort of stabilized at that 429 level. On Friday, we had personal consumption expenditures. We had Chicago PMI and other economic news. Rebalancing month and quarter end. All right, all moved markets lower. SPY dropped nearly 5% in September, 3% drop for the quarter, and this was the first quarterly loss in a year. That was on Friday. So we're going to see what happens. Now, there's some good news on the horizon. Here's a week in review real quick. Recent surge in interest rates, dominant driver, recalibrated expectations for the upcoming Fed policy. Sentiment got sapped by Fed comments and continued restrictive and longer monetary policy settings. They all thought that we're going to start reducing interest rates in early to mid 2024, but now that's been extended out probably to Q3. Inflation backdrop notably more favorable. Consumer price pressures are moderating as Fed's tightening campaign nears its end. Rates might be close to their peak for the cycle. We'll see what happens. And if inflation does continue to drop in the coming months, we might see that drop back in rates, setting the stage for a year-end rebound. And I think that's going to be important. So usually what they see is when there's third quarter pain, there's often fourth quarter gain. Now, again, the S&P 500, not 50, the S&P 500. Let me get this fixed up here. That is S&P 500. It gained, all right, sorry, not gained, didn't gain anything. It fell nearly 5% in September. NASDAQ Russell, they shed almost 6%. And the S&P 500 fell 3% for the third quarter. Historically, again, fourth quarters have seen positive returns after third quarter declines. All right, seasonal chart. This is what it looks like. The blue line is where SPY is now. The red line is the composite of the last 5 years daily chart on the closing prices. So you'll see it's considerably lower here. And focusing in, this is what it looks like. All right, from this is the important part I'm showing you. So I'm kind of going back a week and out a week. So SPY dropped a couple of points last week. Seasonally, SPY rose only about 1 point the following week. Again, this is the last 5 years average closing prices on the daily charts. Does that mean it's going to happen this year? Not necessarily, but it may follow the same trend. Just like the September trend followed. We were down all of September. That's exactly what happened this year as well. I still consider it a flat period, even though we just went up 1 point. When you only go up go up or down 1 point, that's not very much in one way or another. But it's still considered flat. So it doesn't go down and it's suddenly sharp up. It goes down and then kind of hangs around and then it starts going back up, right? That's kind of the way it happens. Looking forward. All right. So Monday, here's the news that's coming up. Monday, we have an Institute for Supply Management, ISM Manufacturing PMI report. And Fed Chair Powell also speaks on Monday, and we're going to see what he's going to be talking about. Now, his words do influence the markets. So I'm going to find out what time he's going to be speaking. Let me just pull that up here. That is coming up Monday. I don't know if it was late morning or in the afternoon. Fed Chair Powell speaks. That's going to be at 11 o'clock in the morning. And that is going to be in a roundtable discussion with workers, small business owners, and community leaders. So his comments there are obviously going to resonate around the market. All right. Tuesday, we have a JOLT job openings report. This usually is also market moving news. Again, we're looking for news that's going to move the economy. If the labor market is lower than expected, then we're going to see a possible move to the upside on the stock market. And on Tuesday, that's coming up at 10 o'clock. They're expecting a number of 8.85 million job openings. So if those openings are less than that, then I expect the stock to go up because that means the economy is cooling a little bit, not as many jobs are open. These are all things we discuss every morning in the trading room, folks. Wednesday, we've got services PMI report, oil inventories, non-farm employment change, factory orders, and Michelle Bowman speaks. She's a Fed member. I believe that's coming up on Wednesday. I'm looking to see what time that is going to be. That is at 10:25. Fed Reserve Governor Michelle Bowman. Now, she is a little hawkish. By that I mean she favors, hawkish means they favor interest rate hikes. Dovish favors interest rate, lower. Let's get it down. So there's a sheet where you can actually go and see where these Fed members, what they, where their bias is. So she'll probably be speaking up. Oh yeah, we still got to, look at interest rates and get them up there so we get this inflation wrestled down. So we can see a little volatility pulling in here. Thursday, unemployment claims. Friday, we got some more employment data. Hawkish, Fed member Waller speaks. I believe Waller is more hawkish than Bowman, and that's coming up on Friday. And there is something else that is, by the way, Hawkeye's going to be at 12 noon. He's going to be participating in a moderated discussion about payment system at an event hosted by the Brookings Institution in Washington, D.C. Fed Reserve Governor Christopher Waller. Okay, so he's going to be hawkish. One other thing that's going to be driving the markets this week, the UAW strike. They're going to be expanding their strike, and we're going to see how that works out. That's influential because of the size and the nature of the strike. And if they get their demands, that's going to put a lot of pressure to the upside, right? That's going to be very inflationary. When it costs you $3,000 more to buy, one of the big three cars, and of course, it's probably going to push up the value of all the cars, but that's going to be very inflationary. It's going to push the markets down, the economy down. That's not going to be good, but we'll see what happens on that one. We're also concerned about the government shutdown, but it looks like they reached to some kind of a ratification on the debt ceiling or whatever, and that's been averted now, so we don't have to worry about that. But this is kind of the way that the week is shaping up. So I'm expecting some elevated levels of volatility all week. So suggested here is aim for small gains. Don't go crazy. Possible further drops again as the UAW strike expands, and there may be some stability appearing in the markets. And the VIX VIX, that is the volatility index, after the bill passed to keep government funded. So we might see the volatility drop a little bit with that, but news is still going to keep, I think, the volatility bouncing around pretty good. Okay, so day by day, watch for that. Be very careful about this because these news items are going to affect the market, and it's going to go both up and down. So I think there's going to be some good movement. But that's good though, because we can make some money on all of that. All right, so I'm going to ask you another question here, a little interactive session here this evening. What is the one thing you would change? What's the one thing you would change if we can help you change this? Is it to build confidence in your trades? Maybe find a reliable strategy if you don't have one. Build consistency in your trade. I get that a lot where people are saying, well, I'm making money, but I'm also losing money. Can't seem to get that consistency in there. You're looking to overcome your emotions, and something else. If there's something else, put it in the questions box. And let's just wait and see until some of these comments come back in here. And John made a good comment concerning the seasonality of the market. He said that you have to consider the fact that 5-year average also has the COVID years in there. So you're going to see some moves in because of that. We're going to be doing some trades before Powell's speech. Powell's speaking at what, noon? Absolutely. Our aim is to get in the trading room. And I'll talk about that a little bit. Get in, make some money, get out. We hope to be in and out of those trades by the time Powell speaks. Is Powell's event on Monday simply prepared remarks or includes a Q&A? I believe there's a Q&A component to his speech. I understand he will be taking questions. So that's another reason I think volatility is going to bounce around pretty good while he's speaking, especially as questions are presented. So we'll see what happens. And yes, government shutdown is postponed for now. That might affect the markets for tomorrow. They always kick the can down the road. So here's what happens with these government shutdowns. They say, oh my gosh, running out of money and the government's going to shut down, which could probably be a good thing. But wouldn't that be nice, Aaron, if we didn't have the government? What would happen? What would happen if there's no government? I think everybody would kind of learn to get along with each other, wouldn't we?
I'm not sure about that. That sounds almost utopian. You're starting to sound a little bit more like some utopian or Ayn Rand kind of stuff going on.
I think the people will figure it out. I think what will happen is, we're all going to take a live and let live attitude. And we'll probably come up with some kind of a plan. Yeah. Just like, China and Hong Kong or whatever okay, listen, we're going to give you 10 years. Here are the states that are going to be red. Here are the states that are going to be blue. If you don't like the blue, you go to the red. If you don't like the red, you move to the blue, right? We're going to go up and down. You got good hot weather, cold weather, whatever you want. Got mountains, oceans, you got it all. And let's split up. Maybe we're too big of a country to try to assimilate into whatever. It looks like there's all this polarization. This is a whole new topic. I don't even want to get into this, but it's a whole new topic. But if forever we never got along, then will we ever get along? Maybe if we just kind of split it up a little bit, maybe have different segments, and I don't know, it's crazy stuff. Doesn't even make any sense, but all right, Clyde, A, B, and C. Yes, that's a pretty cool thing. Okay. Lewis, A, John, C, build consistent. John, if anybody's consistent, it's you, buddy. Paling, A and C. All right, C is a lot of different ones here. I have no strategy, keep jumping from one to the other. Okay. Excuse me. I have no strategy. I keep jumping from one to the other. I remember, I don't know, I keep getting reminded of that little car. I don't know if they still have it or not. It's a little toy. You put in a box or something, or you put it on the floor, and it moves along, and then it hits an obstacle, goes back, flips on its back, turns around, goes the other way until it hits another obstacle, goes on back on its back, and finds a different direction until it hits the next obstacle. You can go from strategy to strategy to strategy. So you can spend all your life moving around to different strategies. And if it works, you're onto it. And as soon as it fails on you or you lose money, you're looking for a different strategy. So what I recommend there is very simple. Find something that kind of suits your style, your temperament, your ability to trade. Not all strategies are going to be, good. I mean, some require your constant attention, right? You have to be in the market all day long. I used to do that. I don't really like that anymore. Now I know Aaron loves that, right? Aaron, you're in the market. You're right. You got the market open all day, right?
Yes. Well, I do take a break, but I am looking at the market most of the time. And I'm also following along. I set alerts and do different things. So yes, if I'm not looking at the market or reading about the market, I'm drawing. Drawing on the charts is actually very therapeutic for me, kind of in a weird way. Whereas people go and shoot basketballs or crochet, like my lady at home, she crochets this stuff, she showed me this picture. She said she showed me this picture of this cat crocheting, and it said crocheting is better than killing people or something. It's better, because it takes your edge off, or gives you stress, takes the stress away.
Absolutely. So, I used to look at the markets all day. I actually used to be consumed by the markets. I used to belong to other groups and stuff, and we would, oh my gosh, I can't believe it. We all had our assigned stocks to look at, sectors. So we'd be in the market every day, all day long. We would be on a meeting. I think it was GoToWebinar at that time. I can't remember now, but we'd be in a meeting. And we'd be looking at the markets all day from 9 till 4 every single day. And then we would have our meetings on Monday nights, I think Wednesday, Thursday, Friday, Sunday nights. We were consumed by the stock market. And we always had to find, well, what's your company? What your group of companies, what's going on there? Anything coming up? I always used to say, no, I don't think anything's coming up, because I didn't know. I didn't even know what to look for. I don't think anybody knew what to look for. Because the other thing is that we didn't want to even put our necks out in case we thought something, because if we were wrong, we knew that people's money was, sitting on the line here. We didn't want that. And of course, you'd always have to look at your sectors. We didn't know what we're looking at. I don't know where the heck this trucking company is going to go in 4 or 5 days when the earnings come out, or where, these other, telecom companies are going to go in 2 weeks, or who knows? It's just a guessing game. With SPY, you're talking about the stock that follows the top 500 companies out there. Essentially, where the economy goes, that's where we go. So we cut all of that out. Right now, I have a pretty good idea. I can get in front of my computer at about 8:30 in the morning, look at a few things, look at fundamentals, some technicals. Aaron and I get in touch with each other. What do you think it's going to go? Here's why, what, whatever. And we have a pretty good handle on where the market's going to go today. We get in, make our money, get out. Usually we're done, 10:30, right? 10:30, you were out of trades. We have made some money, make some money. And then we can get on with the rest of our day. If you want to stay in the market, go for it. If you want to go, golfing or whatever you want to do, hang out with the grandkids or whatever, go ahead, do whatever you want. So that's kind of what we do, which is pretty cool, because to me, trading should be my slave, not me the slave to it. Money is my slave, not me the slave to it. If the money is not working for me and me working for the money, that's not the way I want it to be. I want the money, I want my money to work for me. And if you're in the market like Aaron, and I used to be too, it's because we enjoyed it. And that's different than because, you have to be. All right. Okay. All right. There's a lot of questions here. We'll get to the question a little bit here. Folks, there are a lot of opportunities out there in the stock market every single day. I had a wonderful email testimonial from somebody the other day. It was actually really awesome. His name is Brian. I don't even know if he's on here or not. May not be, and I don't have his email handy, but he was saying that of all the services, I don't know if you saw this one at all, Aaron. I thought maybe you might have. I'll have to send it to you if you don't have it. But he says of all the services he's ever taken, and there were a lot, ours was the only one that he's ever felt comfortable with and that ever worked. And he's made money. He told me how much money he made, and he's all excited. He couldn't sleep at night because he's all wound up about it. Anyway, we teach you how to spot these opportunities. See, here's the nice thing. The market gives you opportunities all day. And if you miss one, don't worry about it, right? Don't miss it. There's another one around the corner. And we tell you how to spot them, how to trade them. And by the way, not all buy opportunities are opportunities that you should get into. A lot of setups are there, but you should not be getting into them for whatever reason. So we started this 2 to 10K challenge. Actually, we did this back in April. And within 3 months, we took $2,000 to $10,000. And by popular demand, we were coerced. We were forced. Our bosses said, "You're going to do it again?" Okay, whatever you say. And we started this last Monday.
Round number 2.
Round number 2, version number 2, right? 2.0. And here's the results so far. All right, here's the results. So we started with $2,000. We're ramping this up to $10,000 by 3 months. Hopefully before 3 months, and starting in September the 25th, we should hit our target by December the 25th. That'd be a nice Christmas present. Start with $2,000, you make $10,000. You can take your whole family on a Caribbean cruise or something on that, right? Your whole extended family. So here's the spreadsheet. The first week,
Eddie.
You might not want them all. Actually, we did that a few years ago. We took my wife and I. We took, oh my gosh, all our kids, grandkids, and I don't know. Looking at my credit card bills, probably some other people too. I don't know. They just kind of all piled in, but it was fun. It was probably the last big sort of extended family trip that we will have taken in a long time. The problem is it's hard to coordinate everybody, right? That's really the thing, it's hard to coordinate everybody. But, we started with $2,000. We're ahead of the game. And if we don't trade this in the next 2 days, we're still ahead of the game. So, and this is the way it works here. I've got the beginning balance, our profit target. I'm only trying to get a very modest gain. This is how I do it. I budgeted it out. And then there's my ending balance that I should have. And there's the actual gains. This is what we did every day. That second trading day, which was, I believe, Tuesday, I was traveling, so I did not trade. Aaron did the trading on his own, but he didn't touch this one. And by the way, Aaron, you're doing tomorrow on your own, so I'm traveling tomorrow, so we won't be doing this tomorrow, but that's fine. We'll catch up on Tuesday. And our actual balance budgeted to be $22.63. We're at $23.80. We're $117 ahead of the game. And here are the notes, what I did, right? Here are the notes. How many call options, which ones, from what price to what price, net price, whatever, there it is right there. So that's it. So that's what we do. We started on Monday, the 25th. It's hosted in the trading room. All right. So there's no special course or payment or anything you have to do or partake in. All you have to do is join the trading room. Now, when I'm looking at this participants list here, I know there's probably a handful of people that are not in our trading room. And at least I don't recognize some of the names in our trading room. And I don't know how that happened, how you people could not be in the trading room. So I'm probably going to want an explanation on that. What do you think? Wow. All right. So that's all you have to do. What's this trading room all about, you ask? I'm glad you asked. Well, it's moderated. Every morning we get it. It's moderated by yours truly and Aaron. We get in every morning at 9:20 Eastern. We're there till 10:30. This is where our strategies come alive. Learn and earn from the best. These are interactive, exciting trading sessions. All right. Some people even say they're entertaining. This is what we've been doing. So what we do is we look and see what the setups are. We bring in, I'll tell you, we trade what we teach what we trade. We discuss the fundamentals, we discuss the technicals, we discuss our setups. If we're going to take the setup or not, why not? Why, if we are, we discuss it all. We think out loud. This is where it's at, folks. This is where these trades come alive in real time, a real market environment. You don't want to miss this. Watch us make real trades, real setups using real money. We also, by law, we have to show you our SIM accounts, but we also do real trades as well, and we talk about them. And here's the other nice thing about this. It's interactive. Just like this webinar. You have any questions? Aaron and I are the only ones to see them, so go ahead and say whatever you want. We take real questions, and we answer them. We answer your real questions, and you're going to get answers in real time. This is the longest running trading room that I know of since 2010. And again, the 2 to 10K challenge, there it is right there. And we have that running. So my question to you is, can you afford not to subscribe? You're talking about $6.99 for 3 months. Basically, I think it's a 6-inch Subway sandwich every day. And I think Aaron and I have to split that as well. So that's all it's costing you for 2, not 1, but 2 professional traders, mentors, coaches on your side. I don't see why. I wish I had this when I was learning. Let me tell you, I would have saved myself hundreds of thousands of dollars in losses. Hundreds of thousands of dollars in losses. All right. So I'm going to say to you this. We're going to talk about this a little bit here. In fact, maybe I should just take this. Let's have a little discussion here. I don't want to distract you with this here. So I'm going to stop the share, just show my screen. All right. Any of these questions? Aaron, are there any questions on there that we could probably address right now? And while you're looking, I'm also going to look. I'm not going to get into your specific trades that you might have had, but I'm going to...
Did you start addressing the questions from the top? It said, I'm new to this trading system. Do you do any trades that last most of the day or only the short-term trades?
Okay. I remember seeing that somewhere. Okay. Our trades are designed to be short-term trades. So here's the thing. To me, a long-term trade is to the end of the day. Now, it's not to say sometimes we might not stay in a trade, but the way we trade, we do everything humanly possible to minimize risk. By that, I mean, on Mondays and Tuesdays, we're going to buy next Friday's expiration. On Wednesdays, Thursdays, and Fridays, as a rule, we could change it, but as a rule, Wednesdays, Thursdays, and Fridays, we're going to buy next Friday's expiration. So we're buying plenty of time so that in case we do have to stay in a trade for a valid reason, it's got to have a good reason, we're going to be okay to do that. Because if you stay in a trade overnight, a lot of things can happen. The market can turn against you, can go in your favor. You can lose a little bit of theta loss. So we want to look at a short-term gain. And if we can facilitate that, then we're going to get into it. Now, we're not looking for huge gains in these trades. I mean, sometimes we are. And Aaron has his set of indicators that amazingly identify some of these amazing moves. So if you want to stay in some of these trades, you can actually capitalize on and I'm talking about, a lot of a gain, sometimes even 100 or even 200% gain in a day, if you want to take it that far. Not all the time, but very often when he comes up with these indicators, it's like, wow, this thing is just unbelievable.
Well, the 100, I would say the 100 to 200 is usually over, not a day, it's usually over a few days that we talk about these swings, and we talk about what we expect the market to do. Now, just to be honest, on the longer terms, we're not always right, but when we are right, we're really right. Because the way that I look at the markets and the geometry that comes in, you can be in a trade, and if you have good money management, you can be up on a single trade, like you said. We had one gentleman that was in. He gave us a testimonial, if I can remember correctly. He just got into our trading room. He was up something like 300% on his account in one trade, in one swing that we had predicted. Now that's not, of course, that's not usual or not all the time, but some of the longer trade setups that we do find and spot while they're happening can be really good money winners.
Absolutely. Absolutely. So here's a comment. I get where this guy's coming from. David B says it takes 6% gains to offset the loss from one big loser. We're getting mixed messages regarding any stop loss strategies. Okay, so let me explain this. And I kind of wish I had the thinkorswim up and running, but I don't. All right, so first of all, we're looking for very, very extremely high probability trades. So it's not like flipping a coin, okay? What you say, Dave, is true if you're flipping a coin. That's not at all. When we place a trade, it has a very extremely high probability of getting taken out with that profit. We're not interested in anything that's not a very high probability. So getting into that trade, we have everything in our favor, in our direction. We get into the trade, we make a very modest gain, 6%, but if it's on a tear, it could be 6, 16, 26, 36, even 46% gain. We don't aim for that. I'm actually very happy scalping multiple times a day. Think about it this way. It's not that difficult to make 5, 6, 7% on a single trade. Would you agree to that? So imagine if you just picked, or even never mind that. Let's say you get to say 9 or 10 cents per trade or 7 cents per trade as a scalp, which usually comes within a couple of minutes or maybe a few seconds even. Sometimes we get a lot of a gain in a very few short seconds. So imagine if you do 4, 5, 6, 10 of those a day before 11, 12 o'clock, you can walk away with a nice bag of cash by the end of your session here. So that's the way so you can't look at it the way you're saying here, where he's saying it's 6% gains to make up for loser. The other thing is this: we don't let our losers go to zero. I can't think of the last time I had a trade that took a zero, like went down to zero. We may not have hard stop losses, but stop losses for SPY options, as a rule for me, generally don't work. You'll often see, because of the leverage on these derivatives, you'll often see where the option will move 10, 20, 30, 40% before it comes back into power here, into your gain. So imagine, if you will, and you probably went through this many times in the past, where you're down 20%, you all get up panicky, right? And then you sell. You think, oh, good, I'm out of it. I only took a 20% loss. But you're still watching it like it's your trade. And then 5, 10 minutes later, it turns around, goes back in your direction. And then 20, 30 minutes later, you see, oh my gosh, had I stayed with this, I would have been up 20, 30%. Has that ever happened to you? Now you kick yourself. Now you got burned twice. Not only did you lose, but now you're watching and you got burned again, right? Emotionally. So stops are really not the way to work with options. All right. Let me just see. I'm just trying to go quickly through these things here. Okay, thanks for that, John. He says, I can speak from being here for almost 3 years. This strategy works, in capital letters, works. Aaron has been a wonderful addition. Definitely agree to that. Definitely. He took it to a different level, folks. And by the way, we're doing very well before him, but he took it to a completely different level.
Thank you. I appreciate that.
Yeah. That's
and we're also working on some things that we haven't released yet. You and I are working on the background on some good things too. So
that's going to be a game changer, man. That's going to be a game changer. I don't think that's going to come out until later this year, maybe even early next year. I'm not really sure. But you're going to want to be in the trading room, because that is going to be unbelievable. We're trying to get the numbers in right now, which is difficult because we're actually doing the trading room during the same time here. Kumar, I'd like to be in the market for half an hour to an hour, 45 minutes max. That's exactly our sentiment as well. We don't want to be in the market all day long. If you want to be, go for it, but you don't have to be to make a lot of money. Okay, John's testimony here for DayTradeSPY. You don't need to worry about micro issues, earnings, etc. It's all about macro issues. Totally true. Volatility typically occurs in the first hour of trading. Many call it amateur hour. That's when I make my money. That's right. You ever hear this term, amateur hour? I so laugh at that, amateur hour. Amateur. What is that? What is that? Is that the first hour of trading, right? Like it's a bad time to be in? Amateur hour. You know when I make most of my money is that amateur hour. And you know what? We make a lot of money during that amateur hour. Give me amateur hour any day of the week. Because does that make us professionals if we're taking the money from the amateurs? Think about that for a sec. Oh, there's so many questions here. What happens if we meet the target before? Does this subscription end on the day, or is it good for 3 months? Okay, so if you, okay, got it. Okay, I see what you're saying. If you come into the trading room on a Wednesday, you are good for 3 months from Wednesday. So it will renew 3 months from when you come in. Okay, so it doesn't expire on a particular day or whatever. You are good for 3 months. Okay, if you come in on September the 28th, you are good until December the 28th. Okay. All right, would like to be in this room for a quarter fully. Okay, so here's another thing about that. Some people want to say, well, can I just try for a few days? I'm going to say you can, but you're going to get the most benefit if you spend a good chunk of time in the trading room, because then you're going to see more of the market. You're going to see more exposure to all kinds of different scenarios. And I think that's really important. Don't judge anything by just 1 or 2 days. Okay, you're not going to get a good picture. You're just going to get, a snapshot. What you want to do is spend as much time as you can. That's why the people that are in this trading room for a long time, that's why they're such good. I mentioned that John was in this thing for 3 years. He's actually an excellent trader. Every day he says, my first trade, I made a second trade, third trade, fourth trade, I'm done for the day. Made my target, done for the day, done for the day. And that's the thing. He's been in it for three years. He became an excellent trader. I'll tell you right up, John can teach this stuff. So very good. Okay, there's a lot of questions here. Aaron, any other questions that you might have up on the board here that you can quickly go through?
Sure, of course. How much weight do you put on your fundamentals in making your day trading decisions?
How much weight do I put on the fundamentals when making my day? Okay, I'd like to know the fundamentals to get an idea as to where the markets are probably going to go, and I find that actually has a really good backdrop. So if I see that the economy is it's not as good as they thought it was going to be, like the forecasts are higher than what the actual numbers are coming in for various things like PMI reports or consumer, all these inflationary indicators. If they're coming in, say, lower than expected, then that I would say is anti-inflationary, and therefore the market is going to go up. Now, the markets do not go in straight lines. It goes up and down, up and down. So you make it a little bit of a short-term spike to the downside, but I will feel very confident when it hits that support level, it's going to turn back to the upside. So confident that every day we punch up the yellow brick road. And those people in the trading room, you see this every day. Look at this. It follows the yellow brick road, right? From the Wizard of Oz. Follow the yellow brick road. And it's uncanny how effective that is. That little program is. We teach you how to do that. So yes, I put a lot of weight on the fundamentals, but we trade off the technicals. Okay, very important. Let me see. One of the biggest questions we had actually so we had this other email went out here last week that we hit these record highs. Well, that was on the number of people joining the trading room. And one of the biggest questions, most popular questions we had was, where were you when I was looking for you years ago? We're always here, but maybe you just never noticed, or you never were ready for it. But we're all here. I don't want to keep it too much longer here. Let's see if I can go through some of these questions here.
Sure. How long should I expect to be in the trading room before I get confident?
Oh, well, again, the longer you're in, the better. I don't know. It depends on how quickly you pick up the strategies, how quickly you pick up the nuances, the mental aspects of it. Aaron, what would you say? Before they get good at it? That's a tough
I would say the ground rule is 30 demo trades, but I would even say it depends on the person. It depends on your experience and also your profession. Before you come to trading, of course, you can take anybody off the street and teach them how to be a successful trader. But I also think the more that you use your mind in the field that you come from, the more mental it is, the more psychological it is, you tend to be a little bit better off. But anybody can come and learn to trade with us, and anybody can come and learn to make money, especially when we're doing this challenge. It just depends on how quickly you can do it.
I wanna know if you really want it.
Yeah, so
And if you do, just shout
I get out of there? Oh my God. Hang on,
Just
guys.
shout it loud and clear. I know it's been on your mind for a while, but to get what you really want can take some time. You gotta be focused now, don't play around, and trust the process and keep your eyes on the prize.
Put on the music there early. You want to unmute yourself, Hugh. Sorry, I put you on mute there.
Oh, sorry. Thanks so much. I apologize for that. You know what? I was queuing up the song and all of a sudden it came out and I've only got two screens here. I couldn't see where it was hidden away. And I thought, so I apologize for that. Sorry, wherever you are. Pick up the last 20, 30 seconds of what you were saying there, Aaron. Sorry.
No, sure. I said, it depends on your background, where you come from. Usually if you come from a background where you're using your mind a lot, and psychologically prepared to trade and quick, it comes easier, but anybody can come to learn to trade with us. Anybody can come and start to pick up the strategy. So there was one question. I have a question. You talk about the 10 EMA and 20 EMA. What is the time frame? Is it day 5, 1 minute? Those are we use the same EMAs on all of our charts. So we put those on the 15, the 5, the 1, the daily, and so on. But usually for daily, we're just looking at the daily direction. There was another question that was here. Do you still offer the ultimate training course for $9.95?
It's still there on the website. I can't believe it. The guys never pulled it down. They're supposed to pull it down months ago or a couple months ago or something, but it's still there. So that's a great question. Thank you. And I'm going to actually promote that now. I'm going to say, guys, listen, when I say guys, I mean guys and girls, go to the website. All right. I don't think the people over at Eagle even know that it's there. Maybe they've totally forgot about it. So here it is. If you go to the website right here at the top, where it says Ultimate Training Workshop, you're going to love this. Go up here. All right. And then click here to learn more. All right. Go down here. And this tells you all about the ultimate. So this is a workshop we did a while back. And we talk about everything, introduction to options trading. We cover everything, the whole thing here. Money management, building confidence, mental aspects. It's all covered. The Greek, scalping, all our strategies, repairing trades, all there. Take a look at this. They took off the regular price. They're offering this for a low price of $9.95. This is no joke. This was a special that they gave, and they forgot to take it down. Get on there, buy it. You'll get this thing, and you're not going to look back. It's a series of videos. Hour and a half, 2-hour videos. They're all great. They're all very topical. They identify, they get right into it. You're going to love this. All right, get in on that one. Aaron, another couple questions real quick, and then we got to go. All right, we got to go. I just want to
sure.
tell them that. That's really cool.
Are your challenge results normal or a stretch?
They're not stretched at all. They're very normal. In fact, they're probably a little underestimated. You could actually make a lot more. When we were doing this thing, we actually cut out pretty early just as a scalp, but they're actually quite conservative. So, all right, listen, I'm gonna call it a night now because I know that we're wrapping it up here. I just want to tell you folks, get in the trading room. All right, get in the trading room. You're gonna get my strategies. You're gonna get Aaron's 1 + 1 = 3 strategies. You're gonna get in all of this for the price of what is it here? You're talking here about DayTradeSPY. What is it here? You're talking here about the trading room. It's only it's at an excellent price. So it's $6.99 for a quarter. All right, it works out to about a Subway sandwich a day. It's actually really good. Now I'm going to tell you, there's 3 kinds of people out there: those that make things happen, those that watch things happen, and those that say what happened. So every day you're not doing this, okay, you're wasting your time, your opportunity cost, your money, all that wonderful stuff. So I would suggest that you actually jump right into this and get in. All right. And I think it's just a really good deal. You are going to learn. If you're not going to learn something on this, I don't know what to do. Just get out of trading entirely. That's my recommendation. With that, folks, I am going to call it a day. Thank you all for joining us. Aaron, thank you so much. Sort of go a little over time, but been a real pleasure. We'll see you back here, hopefully tomorrow morning, everybody in the trading room. Thanks, Aaron. Have a good night, everybody.
Thank you so much. Yep. Take care.
Be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you what